So in this video, I'm going to show you how we can use the moving average strategies for trading. Make sure to click the subscribe button and hit the notification bell, so you will know when we release the new video. A moving average is a technical indicator to help smooth out the price fluctuation so that the underlying trend will be more clearly visible. It's a useful tool for identifying trend direction like uptrend, downtrend, and sideways, and potentially generating trading signals. There are several kinds of the moving average, such as the simple moving average, the exponential moving average, the weighted moving average, and more. The main difference between them is the sensitivity toward the lastest price. There are also many questions about the best way to employ the moving average. For example, how many days should be averaged? Should a long term or short term be used? The answer is you can set the moving average period based on your trading style and the type of market you trade. For example, shorter timeframes may be better for trading in volatile markets, while longer timeframes may be better for trading in trending markets. To set up a moving average, you can go to the website tradingview.com and then select the asset you want to look and open its chart. Select Indicators from the Charts toolbar. Then, scroll down to the Indicators menu and select Moving Averages. You can customize the parameters for the moving average, such as exponential or simple moving average, its period, that is number of candles used to calculate the average, its color, and its style. After setting the parameters, click Apply to add the moving average. If you would like to save the settings for future use, click the Save button. Let's take a look at the applications of moving average. The first strategy is to look for a trend. The moving average can be used to track the progress of a trend. It can indicate whether a new trend has begun or whether an old trend is ending or reversing. Once you have plotted the moving average on a chart, in this example, I plotted the moving average 200-day. You can use it to identify trends in the price of the securities or crypto. If the moving average is sloping upwards, it may indicate an uptrend, while a downward slope may indicate a downtrend. The fluctuation of the price makes it hard to catch the trend. Moving average is created to smooth the data and construct the general direction of the trend. In this example, the candlesticks are above the moving average line, indicating an uptrend. If the closing price is not lower than the moving average, markets remain bullish. In this case, the price goes down below the moving average, it indicates the downtrend. However, the moving average line lags the market action. A 20-day average is used by some traders because it closely tracks price action, whereas longer range averages are less sensitive, but it is more advantageous to use for a long-term trading. The most popular way to find buying and selling signals from moving average is to find the crossovers. You can use two or more moving averages of different time periods to identify potential buy or sell signals in the market. In this strategy, a buy signal is generated when a shorter-term moving average crosses above a longer-term moving average, indicating that the market may be trending upwards. We called it the golden cross. In contrast, a sell signal is generated when the shorter-term moving average crosses below the longer-term moving average, indicating that the market may be trending downwards. We called it the death cross. In this example, I use a 50-day and 200-day moving average. A buy signal is generated when the 50-day period crosses above the 200-day period. And a sell signal is generated when the 50-day moving average is below the 200-day moving average. Another strategy is to use the moving average as a dynamic support or resistance level. Moving averages can also be used as dynamic support or resistance levels, depending on the trend. If the price of the stock is trending upwards and the moving average is acting as a support level, it may be a good time to buy. This example shows that the price bounces back when it's close to the 50-day moving average. There are many traders out there who look at these moving averages as key support or resistance. When the price dips and tests the moving average, these traders will buy. On the other hand, if the price is trending downwards and the moving average is acting as a resistance level, it may be a good time to sell. As you can see, every time the price entered a resistance zone, it dropped. Traders could sell if the price rises and touches the moving average. However, you also need to know that they can break, just like any support or resistance level. If you want to learn deeper about the moving average and more trading strategy, make sure you subscribe to channel and comment below what you thought and what you want us to cover. Thank you for watching this video.